Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, investors, as we head into the second half of 2024. I know that many in the audience are concerned about this unprecedented disconnect between financial markets and fundamentals. And that's why I've brought back our special guest today, Chris Galizio, to discuss developments that we've seen over, I think it's been about a year since we've had you back on the show. We'll certainly be discussing his upcoming movie, Money Game. Actually, we can't even really call it upcoming now because I believe you're already in theaters. Looking forward to. We'll talk about the timeline. So this will provide an entertaining and educational perspective, the impact of runaway printing presses on the real economy and many other things as well. So a quick introduction for our illustrious guest. Mr. Galizio has been at the forefront of the investment industry for nearly, I think now maybe over 30 years. For over a decade, he was the portfolio manager for the Fidelity Large Capitalization Growth Assets, which grew from 20 million AUM to over 7 billion during his tenure. After leaving Fidelity in 2017, he started a hedge fund. And by January 2020, he wrote white paper entitled The $340 Trillion Problem, as it became ever clear that financial markets no longer made sense. He's also the executive producer of the aforementioned Money Game. And we're very happy to have him here at the Foundry. Can't wait to hear what you have to say today. Welcome to the show, Chris.
Thanks, George. It's good to be here. So what I've noticed is nothing makes sense. I mean, we're seeing. I actually think everything's working in reverse because the ecosystem changed. When you remove risk from an ecosystem, the ecosystem changes, right? So we're seeing things have shifted from humans in making efficient allocation decisions to machines which don't, right? So the opening quote in my movie is, the task is not to see what no one else sees, but to think what no one else has thought about that which everyone sees. Because you're all seeing things that nothing makes sense. We have GameStop, revenues declined 37% last quarter. They lost $25 million. Nobody goes there. But the stock's trading at 10 billion. You have Boeing, which has trading at $110 billion and hasn't been able to cover their interest expense in 5 years, right? I actually think what's happened is, and it's in the movie, is the ecosystem changed. The entire system shifted to machines. And everyone's looking and saying, well, the machines won because the machines must be smarter because they're beating the market. No, the machines aren't smarter. They're winning because they have no morals. It's moral hazard. Machines don't make sense. So you're looking at, anyone look at Boeing and say, why would anyone buy that? Why would you pay $110 billion for a company that can't cover its interest expense and hasn't covered its interest expense in 5 years? And the answer is no one would. And then you'd say, well, who's buying it then? And I'd say everyone. Because they're buying it and they're passive and they're quant because they're believing that markets are still efficient. And the entire system is based on the belief that markets are efficient. But what happens if markets aren't efficient? What happens if everything starts disconnecting? And I think that's, as a portfolio manager, that's what I saw in 2008. It's the biggest quote in the entire movie. When the Fed intervened in bond markets, they broke the ecosystem of capitalism. Mm-hmm. Money shifted to the passives and the quants, not because they were smarter, but because they have no morals. And I just think it's a fascinating, it's the most, I actually think everything's working in reverse now. Watch here's how it should happen. It should be fundamentals happen. Company earns a profit. Then the narrative builds, right? Oh my God, look how profitable these guys are. Then the price moves, right? Notice what's actually happening in markets today. We'll take Carvana as a good example, or GameStop, take your pick. The price moves first. Then the narrative builds. Well, why is it going up so much? Well, it must because if you in the case of GameStop, it must because of NFTs or something else. They just build in a narrative. Then the fundamentals happen. But the fundamentals don't happen from what you thought it was going to happen from. They sell shares. GameStop goes to 20 billion. Now all of a sudden they sell 10% of their shares. Now they really do have $2 billion on their balance sheet. But it's not from selling games like you thought it was going to be.
Right.
It's from selling shares. I would argue that the system today is a financing system. It's not an investing system. So when you had the reserve currency in the world print money, it broke the ecosystem.
Yeah, and people talk about the machines, as if that's something new, but we saw a lot of trouble. Let me do the math here. It was almost 40 years ago. The machines really helped to crash the stock market in 1987. So nothing really new. It's just a lot more intense as the machines have taken over.
So the closing quote in Money Game is it's from Jack Bogle, the founder of Passive. He said, if passive ever gets bigger than active, there'll be chaos and catastrophe. Our markets will fail. That's our closing quote. What you're seeing is markets fail, not in the sense of price going down, but in the sense the entire system starts to misallocate resources, which, by the way, is the theme of the movie. Capitalism requires risk to allocate scarce resources, right? If those companies like GameStop don't go to zero, then we keep pouring money into companies that lose money. Boeing, Carvana, take your pick, all the tech companies. I mean, if you notice that the tech companies issue shares every year. That's the other thing I would point out. Are these companies going up because they're beating expectations, or are they going up because they are printing shares? And every quarter, in a passive world, if you print shares every quarter, you become bigger in the index, right? If you become bigger in the index, the passives would then follow the momentum and push up further. I would argue things are operating in reverse now. And I think that, and so now the entire system is misallocating resources, which slows the real economy. The lead character in Money Game represents the real economy. So what we're trying to show in Money Game is we're trying to show two different economies: the real economy and the financial economy. The financial economy is represented by the CEO of Tapit. It's kind of like Snapchat, TikTok. It's kind of like the next big thing. The villain in the movie is Bryson Hill, who's the CEO of Tapit, and he's sitting there saying, "James." Of course, this is a rated R movie. And so he's got both of his middle fingers up like that. Can't quite see it, but there we go. He's pointing at himself saying, "James, why do you think my company is trading at $4 billion? It's the concept, man. And I'm the concept." And he points both of his middle fingers at himself. If you think about Elon Musk or Zuckerberg or all these guys, they're all thinking that this is direct. It's the reason these stocks are going up because of them. It's not because of them. It's because as interest rates fall, asset prices rise. When interest rates go negative in real terms, all assets are worth infinite. Professors say my coffee is worth infinite. My desk is worth infinite. My chalkboard is worth infinite. Does that make sense? Do you see why the rich have all the money? The stocks are trading infinite. So the system has shifted from capitalism, which benefits everyone, as we know, to a centrally planned economy, which only benefits the rich at the expense of the poor through inflation. And so that's why we're seeing all the money flow to the rich at the expense of the poor. I would argue that there's two types of, if you look at the background at Money Game, you go into one of his classroom scenes, you'll see a picture of, on the left-hand side, you'll have a guy paddling to hell. On the left-hand side, he has Adam Smith, the invisible hand. Government should do nothing. On the right-hand side, he has Keynesian. I would argue that Keynesian is central planning. They're manipulating markets. Risk is important because you actually have to let companies like GameStop, you have to let the gazelle get eaten. If someone wants to invest in GameStop, it has to go to zero. Then they'll learn the next time that they shouldn't invest in things that don't make sense. Boeing, Amazon, take your pick. But Snapchat, Snapchat has a negative 70% gross margin. So the more they sell, the more they lose. That's gross margin. That's not operating margin. So when you look at these things, I actually think the system, as a portfolio manager, by the way, I'm not like a guy, just a movie guy. I've run portfolios for 30 years, right? So it's not like I look at this stuff and say it doesn't mean. It's not like I'm saying it flippantly. I know the valuations of companies, and if you believe what I'm saying, that everything's working in reverse, what you should see is companies that need financing the most go up the most. And that's what you're seeing, right? And companies that are profitable go down the most. Because if you believe that, ask yourself, do you care more if a company beats expectations or makes a profit? Because the narrative keeps saying, well, the reason Snapchat went up is because they beat expectations. But if you own the business, say, I don't care if they beat expectations, I care if they make a profit. But that's not what's happening. But the reverse is also true. You can look at companies like Petrobras trading at 4 times earnings, Stellantis trading at, it's 3 times earnings, but if you to include all their cash that they have on balance, it's basically even. I mean, you're basically paying nothing for the company, right? Because their company generates $20 billion in profit a year, trades at 60, but they have 40 billion in cash. So I believe what you're seeing is a system that is working opposite its fundamentals, and that's why it was so impossible for a human to win. The humans got run over because they would look at there was a maybe 2 years ago, there was a deli in New Jersey trading at $10 million. If you looked at it, you said, well, why would anyone buy a deli in New Jersey that's losing money for 10 million? Well, then it went from 10 million to 115 million. And everyone's like, what the hell's going on? But we keep seeing it. People keep seeing it, and they keep saying it's one individual stock that's doing it, but it's not. It's the entire market.
Right. Here, just take one more example. GM right now trading at a price earnings of currently 6.06, Tesla at 66. Market cap of Tesla is 14.4 times that of GM.
Right.
Does that make sense to you?
Well, I mean, GM, I think, probably makes about 4 million cars a year, 4 or 5 million cars a year, whereas Tesla produces maybe 150,000. Of course, it doesn't make sense. It actually makes my point, right? So why did Tesla go up so much? Because they were issuing shares. If you go back to Elon Musk in the day, maybe he basically said, we would have gone bankrupt because in 6 weeks, we're about to run out of money. So we raised it, we issued shares. Okay, in my thesis, issuing shares increases your market cap, right? Makes you bigger in the index. The indexes have to buy it, right? So it pushes up. Then the quants would say, oh my God, look, the market cap went up, and they buy it. Then what they did, the stock went from 200, I remember at the time, to like 800. And they said, hey, well, we might as well issue shares now because now the price is higher. So we'll issue shares. They did it again. Then they split their shares. And if you believe the more shares you produce, the higher the stock price goes, then that's what happened. And by the way, the same thing happened with GameStop. It was trading at $400 million. Then all of a sudden, notice also, who's the smart money in the market? It's not Buffett. Buffett's underperforming the market, right? But people use performance in the market to measure whether you're smart anymore. But that is dependent on if markets are efficient. But you're watching a market that isn't efficient. Why? Because the Fed intervened, right? Once the Fed intervened, Professor Gardner will say, what would happen if I remove risk from capitalism? Let me give you an example. What would happen if I remove the lions from the savannah? One of the students will say, well, the gazelle population would explode, passive investing. Another student says, well, but then they'd be competing for scarce water resources and die off. To which the professor says, correct. And when the Fed intervened in bond markets, they broke the ecosystem, right? So the system shifted to passive and quant, and everyone's attributing that and saying, well, passive and quant must be smarter. Well, passive is just a dumb index, right? There's no, I mean, all that was happening is the Fed was printing money, but money was flowing to the indexes regardless of valuations and regardless of fundamentals. Now things are so disconnected that it becomes completely clear, but you have CNBC every day telling you, well, the reason the stock went up was because, and they fill in a narrative. That doesn't make any sense to them.
Right.
So I think market's completely broken now.
Okay, well, I think we've pretty much established that even though we've had some serious interest rate hikes in terms of the rate of change, unprecedented, not unprecedented in terms of the final federal funds rate, however. But that hasn't been enough to really bring things back to gravity. I want to say the S&P 500 is up over 26% since June 2023, July 2023. What is it going to take for markets to feel gravity again?
So I don't think the markets are going to feel gravity. I think you're sitting in a sovereign debt crisis. The Fed is manipulating markets, manipulating interest rates. And you should also look at interest rates in real terms, right? I think they're telling you inflation's 3% and interest rates are 4%. So you're getting a 1% yield to lend to a country that has 125% debt to equity or debt to GDP, right? Mm-hmm. That can never pay you back. We're running $2 trillion deficits, right? That's the biggest deficit we've ever run. We have a $35 trillion in debt. We're running $2 trillion deficit a year. They're going to have to, just by the way, the second biggest quote in the movie, the professor raises the book, The Efficient Market Thesis. He laughs. He throws it in the trash. He says, smart people thought the world was flat once too. Then he raises the book, The Story of the Great German Inflation. And he says, von Havenstein, the head of the German central bank during the Weimar Republic, had a choice: print the money or trigger the revolution. Here we are at that point. They're going to have to print the money to keep stock markets up, and that's what you're watching. Why are stocks up 26%? Because they can't allow a nominal recession, right? The last time we had a recession in 2008, a big recession, obviously, the financial crisis, tax receipts went down 25%. Tax receipts right now are $4.7 trillion. If tax receipts fall 25%, they're going to fall to, say, $3.7 trillion. Now put 10% interest rate on 35 trillion, 37 by the end of the year. That would mean that interest expense is 3.7 trillion and tax revenue is 3.7 trillion. That means we'd have to cut every other expense across the board to zero and still couldn't fund it. Right? So you're sitting in a sovereign debt crisis and there's no way out of this except to print the money. And by the way, it was clear to me when I made the movie that it was that's how this is going to end.
Exactly. Well, hey, let's frame the timing. So since the last time you came on the show, and by the way, perfect timing for the movie. It could not be better. So last time, I think it was February 2023, national debt was at 31 trillion,
Wow.
455 billion. Now we're July 15th, we're at 34 trillion, $2.5 trillion increase. Core CPI inflation decreased from 5.5% in February 2023 to 3.4%, May 2024, 2.1% decline. All right, so I see you smiling. Let's go behind the smile. Core CPI, like, do we trust this? How do you really measure inflation? Big Mac index, and there's kind of our own intuitive index. I would say everybody just knows that not only have prices gone up, but they continue to rise. Where do you think inflation really is, and how would you track it?
So I wouldn't use government statistics. CPI doesn't make sense. They keep changing the definition. I actually think your Big Mac index probably makes more sense. And I keep hearing people complain about, oh my God, Big Macs, if I go out there, it's 20 bucks these days to get a Big Mac meal or something like that. So I would use things like that. I would use common sense. Look at the price of eggs, look at the price of steak, look at the price, go to the grocery store. I mean, there is no way in hell that inflation is 3%. They're just lying to you, right? So that's just my opinion. So, I mean, they can make whatever they. By the way, when you look at inflation, even on the government statistics, you see the chart go like this, right? And then it may have leveled out. And so they're showing you the last 3 months, maybe the last year. Okay, now it's leveled up, but that's after inflation has gone up 40%, right?
Right.
I mean, Milton Friedman said, by the way, they're also telling you that there's other reasons besides money printing that's causing the inflation. But Milton Friedman famously quoted, inflation is everywhere and always a monetary phenomenon. Always. So I don't know why they tell you it's supply chains, it's all, because we know that's all lies.
Well, you don't think that they're trying to deflect, do you?
Right, right.
They wouldn't do that to us now, would they?
It's the big lie. It comes back to Joseph Goebbels from the Nazi regime. He was Hitler's propagandist. You can, as long as you tell a lie and keep repeating it on CNBC every single day, people will eventually come to believe it. You can protect the people for only as long as you can protect them from the political, economic, and military consequences of the lie. And that's what you're seeing. So I don't believe. I think if anyone with common sense, just go to the grocery store, go to the Big Mac index, and you'll see that inflation is well above. And by the way, think about this. This is the money game. As interest rates fall, asset prices rise. So go back in 1980. Debt to GDP was 30%, right? Interest rates were 18%. Does it make sense that as debt went from 30% to 125%, interest rates went to negative, from 18% to negative? Why would return go down? That doesn't make sense. Which then, the reason I made the movie, because I eventually realized that I was on the side of math, economics, and finance, and the rest of the world has chosen something else. So I said, okay, you're going to give me math. You're going to give me things like 2 + 2 is 4 in terms of GameStop. You're going to give me crowding out, because we know when a country runs $2 trillion deficits, it crowds out private spending because it drives interest rates up. Why didn't interest rates go up? Because the Fed intervened in bond markets. Right. So Larry Lindsay in May of 2015 said it always, always, always ends this way. Rome, the Ming Dynasty, Zimbabwe, the finances of the state are no longer sustainable. Let's hope it doesn't get there, because if it does, the government will do everything in their means to protect their tax revenues.
Right. Yes. Well, let's get back to Milton Friedman. You talk about inflation, always and everywhere, a monetary phenomenon. Let's take a quick look at M2 in 2010, stood at about 8.4 trillion before the pandemic. A lot of money printing going on there. 15.4 trillion. And then looks like we reached a maximum of about 22 trillion. Here, just get right down to the point here. Now we're close to 21 trillion. I mean, like
Right.
the money supply really has not declined, even though the interest rates have gone up. And I don't know if you want to get into the details of money creation. Of course, it's not they're not stamping coins anymore. They're not even printing paper money anymore. We have fractional reserve banking, etc. It gets amplified. It's not just the Federal Reserve, in other words. But I mean, the money is not really disappearing.
So they can never allow it to go down, right? That's the thing. That's the fallacy of this of a fiat currency. You can never have deflation, right? Because they can always print more, right? They're and you've heard Bernanke, you've heard Greenspan, you've heard all these guys say in the past, we will never run out of money, right? We will always. And by the way, you look at the mandates of the Fed: unemployment and stable prices, right? Is that their true mandate? Because notice that every time there's an issue with Treasury market functioning, they step in, right? Because my belief is either a third mandate or this is the only mandate, is that Treasury market functioning. By the way, as the global reserve currency, we've been shipping dollars overseas, right? So we've sent trillions and trillions of dollars. By the way, we've become really good at exporting dollars, but we're not really good at exporting anything else anymore. During COVID, we don't produce anything, right? So that's the downside of being the reserve currency. You basically export your jobs and you send dollars overseas. I think now what you're seeing is the BRICS are shifting away from dollars. The BRICS have are trying to establish their own currency based on gold. And by the way, all these things you're seeing, Bitcoin, price of gold going up, it's because the government's printing money. By the way, it's in Money Game. Professor Gardner turns to his whiteboard and says, money supply, and we used M2, money supply was 16 trillion, now it's 21 trillion. We've printed $6 trillion over the last 18 months. And then he says, print the money or trigger the revolution, because that's where we are. And it says Germany had an enormous debt. Then he points to the American flag and says, guess who has the biggest debt now? So it's all in Money Game. But keep in mind, Money Game's not all just financial. There's also a love story in there. There's also a mentor relationship. People have been calling it Good Will Hunting meets Wolf of Wall Street. We've gone to 4 film festivals and won Best Film at all 3, and Best Film at all 4, and Best Screenplay at 3 of them. And I think we've won about 16 or 17 awards. Best Director, Best Lead Actor, Best Villain, Best Supporting Actor, 𝐂𝐡𝐫𝐢𝐬. So we've been really successful. Let's just hope we can keep it up. And let's hope we can actually spread the word that now we have 2 different economies. Notice the closing quote in the movie, it's kind of one of the messages we wanted to send in the movie, is our system's broken. It's clear now that money printing sends asset prices up. What's less clear is it also slows the real economy as we misallocate resources. Now we have 2 different economies. The financial economy and the real economy no longer work together. Money printing doesn't create wealth. Wealth is created by all your hard work. Think of all the negative aspects of that. So Amy in the movie, she's our lead actress. They go to an Italian restaurant. It's during COVID. It's closed. It's a mom and pop. She says mom and pop restaurants got hit hard, but the big guys, they still have their lights on. Look at Shake Shack. Shake Shack still printing. I mean, during COVID, everything was fine, right? Stock was doubling, even though nobody was going in there because it was COVID. Professor Garden, during the movie, they point at the TV. They're essentially looking at Live Nation, and they say, "Hey, look, the stock's doubled." Well, that makes sense. What do you mean it makes sense? It's COVID. They do concerts. Concerts are closed. Why is the stock doubling? Right? But imagine professional investors saying, well, it must be predicting something in the future. It has nothing to do with predicting anything in the future. Markets don't predict anything anymore. Markets are dumb machines, passive and quant. Markets don't read the news. One of the quotes I use as the executive producers: once you understand that markets are broken and not reading the news, you're holding a crystal ball. Because you can go buy a company like Zim trading at 1x earnings right now. Stock trades at 18. I think they'll probably earn over $20 this year. As a matter of fact, it trades at $2 billion market cap, over 2021 and 22, it earned $9 billion. How can a company that earned $9 billion in 2 years be trading today at $2 billion? That doesn't make any sense, right? So I would argue because they were paying massive dividends. When you pay a massive dividend, the day of the X, the stock goes down, right? Then the quants push it further. So it actually, I would argue the system actually punishes companies that are paying massive dividends and earning lots of cash. That's amazing.
Yeah. Yeah, absolutely. So, yeah, so you talk about that third mandate. So just to spell it out, essentially making sure that our country doesn't run out of money. We can't get it all from taxation. Essentially, they are just financializing our debt. So, actually, no, before we do that, I realize we still haven't really talked about the timeline. Was one of the first things I wanted to talk about. So, yeah, you mentioned winning 4 awards. I think a couple you didn't mention was Best Original Screenplay and Best Picture Award at the Boston Film Festival. And you're already in theaters. Record this mid-July of 2024. How long is it going to take to get some more widespread distribution in theaters? And when are we going to see this on streaming services?
So our biggest issues, well, first of all, streaming services, we're signing a 10-year distribution deal with Buffalo 8, and I think we'll probably be in streaming in 6 months. But in the meantime, we have theaters, and so we didn't have a big budget to make this movie. That said, our acting was phenomenal, and we keep winning awards for it. And our film crew is equally as good. They actually shot Coda, which won Best Film at the Oscars. So I don't think you can get a much better film crew than that. So I think the quality of the film is very high, and that's why when we go to the Boston International Film Festival, the International New York Film Festival, we win Best Film and Best Screenplay. We also won it at Roxbury. We also won it at Dream Machine, and we won one other one. But so I think and by the way, the crowds have loved it. We've had big crowds at Boston International Film Festival that you talked about. We sold out an IMAX, which is actually incredible. It's humbling. When we brought it to Greenfield, which is the first place we brought it as a movie, at the theaters, we were the second best performing movie at their theater, behind Inside Out. But Inside Out's the biggest movie from Disney, I think, ever. So that was the only thing that beat us. We beat out Furiosa, which is kind of like Mad Max. We beat out Bad Boys. The reception has been really good. And now we're just kind of slowly walking it towards other parts of the country. Our next one will probably be, I think in August, we'll be at White Plains, New York, and we're trying to book with a couple of theaters. We've been talking to Apple Cinemas, which has 12 theaters in basically New England and New York area, and they're basically saying, yes, we'd love to have you. So we're excited. It's a good time and it's fun. And we're going to have the next 6 months. We'll be rolling it out as quickly as we possibly can.
Yeah, beautiful. And just so glad to see something significant getting the attention it deserves. Well, we talked about inflation and surviving inflation. And I know you mentioned this in your movie, that requires having hard assets.
100%.
So if you're not for GameStop or Tesla or some of these other super hot stocks, then what sort of assets are you loading up on, and what sort of assets should our listeners and viewers consider?
So everything we say in the movie are literal quotes. They're real quotes. Like the most underused books in finance are history books, right? And he talks about the story of the Great German Inflation. If you read a book called Dying of Money by Genzo Parsons, he talks about it. And during Germany, this is basically a replay of Germany. You had all those hot stocks flying through the moon, right? But when the currency collapsed, all those things went to zero. And by the way, the currency collapsed, the economy never did, right? All it was a transfer of wealth in Germany from creditors to debtors, right? The economy never hiccuped, right? All those stocks and all those companies went to zero. They just kind of blew off, and all that left was the real economy, right? So think about creditors. Creditors lose all their money in that, right? Can the government pay you back right now if their debt is 125% and we're running $2 trillion budget deficits? Do you think it makes sense, even if you believe their inflation? If you believe inflation is 3%, does it make sense to get 4%, basically 1% real, to lend to someone that has 125% debt to GDP and is running a $2 trillion deficit? There's no way they can pay you back. We know it. right? So at the end of the Great German Inflation, all those companies basically went to zero. Creditors lost all their money, and debtors benefited. I'm sitting in a house. Let's just say the house is $1 million. If you put $100,000 in the house, at the end you own the house. Now you have $1 million house. Now let's think about it in a bigger context. The global bond market's $140 trillion. The stock market is $65 trillion. Gold is $14 trillion. Let's see, Bitcoin's $1.6 trillion, and silver is $500 billion. So I would argue that all that $140 trillion is eventually going to try to buy all that stuff below it. It's already trying to buy the stock market, right? That's why stock markets make no sense, right? But what stock? Here's the irony of this whole thing. You can buy real assets. Take a look at Petrobras. Trades at 4 times earnings. Has a 25% dividend yield. Ecopetrol, it's a Colombian oil company. Trades at 5 times earnings. You can buy Rio. It's a UK copper-based company. Trades at 5 times earnings. Glencore. If you look at the real assets, the irony of this whole thing is that the real assets have never been cheaper. Professor Gardner says it in the movie. He says, you're living in a very financialized economy. Stocks, bonds, and cash are all massive bubbles. Nobody thinks about cash, right? But if the government defaults on its debt, cash is worthless, right? One of the quotes I like from Luke Gromen, he's an economist that I listen to. The strongest the dollar will ever be is the day before they default. Because if the dollar keeps getting stronger, it's because interest rates are going up, right? Until interest rates go up to such a point that they default. So think about it. Cash, if the government defaults, your company's worth, or your dollars are worthless. If they print money, your dollars are worthless over time. So there's no way to win. Now think about gold on the opposite side of that. If they default, then the gold price goes to infinite in dollar terms because the dollar went to zero. If they print money, gold also goes up, right? They've printed so much money. And I believe what they're doing is they're pushing the price of gold down. They're holding it down on the COMEX, and we're basically looking at an artificial price. And so it's kind of like taking a ball and sticking it in the water and pushing it down, a beach ball, and pushing it down. All of a sudden, it just pops up and explodes higher. And I think that's what you're going to see. So I would buy real assets. I think gold stocks. You can buy gold stocks at 2, 3, 4 times earnings.
So you talk about miners here.
Yep. I mean, you can buy gold itself. You can buy silver itself. I think the most explosive of all those. Just look at the size. I mean, you've got $140 trillion trying to squeeze into $500 billion of silver. That's all there is. There's only a handful of companies, 10 companies that do silver at the most, maybe 6, 8. It's not that many, right? And they are fractions. I mean, think about this. NVIDIA trades at $3 trillion. All of silver in the world is 500 billion. Like, so if the currency collapses, how much of NVIDIA product are we buying? Not very much, right? So I just think it's amazing to watch. On the one side, you've got stocks like AMD, right? AMD, if you look at AMD, I think they traded about 250 times earnings. So in their growth rate last quarter, I think was -8%. So they're declining. They're not growing, right? Professor Gardner, we try to make this point in the movie. Interest rates fall, asset prices rise. He's got the money game sitting behind him. He's got value of $1 paid annually. And he says, who here is willing, and the interest rates are 0.66%, right? So he says, who here is willing to give me $152? 1 divided by 0.66. If I give you $1 forever. First day student at community college says, hell no, we'd all be dead by the time we broke even. Professor Gardner turns to him and says, correct, right? Because you're not going to get your money back. But it's amazing you've got financial professionals telling you buy AMD because of AI, even though it's declining and trading at 250 times earnings. It's actually, the real world is actually more exaggerated than the classroom scene we had, because it doesn't make sense. Why would you're not going to get your money back? But professional investors who are still committed to that markets are efficient are telling you to buy it. But I'll never get my money back. Right. Okay. So when the inflation, so at the end of this, what happens is the inflation blows off, and it's a replay of Germany, and then all that's remaining is the real assets. And the irony is that you can buy real assets right now at 2, 3, 4 times earnings, or you can buy AMD, which is declining at 250 times earnings. It's obvious. Right. When you see it, it's like, wow, it's obvious. But every day CNBC is telling you markets are efficient.
Right. Well, I'm glad you mentioned Luke Roman. Yeah, hopefully we'll take a lot of important lessons away from this, and we can write a different ending to this economic story. Well, anyway, I want to thank you so much, Chris. You're really doing a lot to enlighten, inform, and entertain people today, and hopefully for the coming years in this movie Money Game. And with any hopes or with any likelihood, we will be able to write that better story. So I want to thank you very much for taking the time to share your knowledge and experience with our audience. Thank you, Chris.
Anytime, George. Happy to be here. Thanks. I'll do it anytime.
Pleasure. All right, I'll take you up on that.
It's good. It's all good.